Prashastha Seth, Chief Fund Manager with IIFL Private Wealth, joins us. Prashastha, good morning and thank you for joining us. Prashastha, Nifty is almost sitting at a fresh new high. So optically, we are not far away from a brand new high on the Nifty, but the underlying momentum, the fundamental triggers and flows are missing. So do you think at higher levels there is still a big question mark on durability and sustainability?
I think, Nikunj, it all depends on how market perceives the election results would be. If you think and market starts to price in that you would have a BJP-led government, then you might not see a sharp sell-off because people will position their portfolios and equity strategy on the hopes that you will see a marked improvement in equities post May. So in that scenario, essentially you wouldn't see a big sell-off. But if somehow the markets start to believe that the BJP might not form the government, then obviously you would see a decent amount of sell-off from where we are at this point of time. So I think it's something which is dependent on event. I think obviously the global cues are not very supportive over the last few days. If you see what is happening both in US earnings, people are not very enthused about the earnings out there, and that rub-off is happening in other Asian markets. To that extent, I think India is outperforming other markets. So it's an event, and depending on how market perceives the event will pan out, I think you will see a move.
Prashastha, the one stock which is going to be in focus today would definitely be L&T, and disappointing in terms of the margins as well as the order flow guidance which has been cut this time around. What's your take?
I thought margins were better than anticipated. I think there were disappointment both in terms of order inflow and in terms of revenue growth, but to us margins was a positive surprise. I think you saw a margin expansion on a quarter-on-quarter basis, which is something which nobody was anticipating to this extent, and also the fact that you have seen a margin improving on a quarter-on-quarter basis after many quarters. So I think obviously revenue growth has been lower, order inflow has been lower, so obviously there are some challenges in terms of how things are going to shape up in terms of revenue front. But I think, stock seems to be reasonably priced, I think, based on the results, and I wouldn't kind of see a huge amount of movement in either direction today based on the results.
Why do you think margins were a surprise? Because if I strip off the hydrocarbon part and if I only look at the non-core business, there's hardly any move there. Margins are looking strong because what they've reported for the quarter gone by is a margin picture minus the hydrocarbon business.
No, that's true. I think, but I think it's still higher than what we were estimating. So for us, I think it was still a positive surprise.
Looks like no one is excited about the JLR story anymore, because if Maruti and Tata Motors in last 6 months have moved neck to neck, that just tells you that markets are revisiting domestic or passenger-oriented companies.
I think there are two aspects. One, I think, is the whole yen story that is playing out for Maruti. So I think that's also a very important factor for Maruti. I think if you wouldn't have seen this kind of sharp movement in yen, I don't think you would have seen the kind of returns that you are seeing in Maruti. So that's point one. Point number two, I think you are correct to an extent that people, whether it's L&T or Maruti or any other player, people are starting to price in a bit of a recovery in the economy as well as in the volumes of the companies in the second half of next year and FY 15-16. So I think people are becoming more positive on India, and obviously China remains a market in which I think there is no clarity with respect to how things are shaping up, and with all this credit crunch talk in China, I think there is a fear that you might see further deacceleration in economy in China, which would have an impact on JLR volumes. So I think, yes, you are right. Partly, I think people are becoming more positive on India and less positive on China, and that also is partly playing out with respect to Maruti versus a Tata Motor performance.
Prashastha, the one stock which held out yesterday was Bharti. Of course, there are reports that the company is planning to sell its African tower business, and that's going to help them garner some amount of money. What's the prospect of the telecom space according to you?
No, I think for telecom space, I think you would have to kind of wait for the auction and see how the whole auction plays out. I think the key factor that will decide is how aggressively Reliance bids. And if Reliance essentially doesn't bid very aggressively, then obviously you could see a decent uptick in a stock like Bharti from where we are at this point of time. However, if Reliance is very, very aggressive in its bidding and it's, let's say, bids with a view of having a pan-India 900 megahertz spectrum, then obviously the dynamics with respect to tariffs will kind of totally change in the sector. So I would kind of wait for the whole auction thing to be clear, but I think it all depends on what Reliance does and how aggressive Reliance is in this whole bidding process.
Okay, Prashastha, one more comparative analysis for you. In last 6 months, Infosys has appreciated by 31% with all the uncertainty, and TCS has appreciated by 30% with all the delivery. Similarly, last 1 month, Infosys is up 6% and TCS is up only 6.5%. So TCS and Infosys now are moving neck to neck. Why is that happening? Because one company is delivering, the other one is struggling.
So I think, see, my view is with respect to TCS and Infosys is I would at this point kind of prefer Infosys over TCS, even though, there could be, some uncertainties in terms of delivery. I think what you are seeing is some amount of converging in terms of growth rates between TCS and other IT players. So the difference between growth rate on what TCS is offering vis-a-vis the other IT players has kind of shrunk very substantially over the last 1 or 2 quarters. And our sense is that you might continue to see this convergence going forward as well. So the sharp outperformance that TCS showed in the last 1 or 2 years with respect to growth rates of other IT players, I think that's going to converge. And if that happens, I think valuation will start playing a more important role. And as you are aware, TCS is trading at a substantial premium to every other company in the sector. So that I think is kind of a bit of a headwind for TCS. And my view is that TCS is unlikely to outperform other IT companies over the course of the next year or so.
What are your top 3 holdings, and minus Nifty 50, what do you own in the portfolios you manage?
I think the top 3 holdings are Sun, Dr. Reddy's, ITC, Infi. I think those will be the top 3 or 4 holdings. Apart from Nifty 50, we hold a lot of Bajaj Finance. We hold a decent amount of Torrent Pharma. I think, those will be the 2 names apart from Nifty 50 where we have substantial holdings.
Why do you like Torrent Pharma? Because Torrent Pharma will soon be acquiring the OTC business of Elder Pharma, which automatically will change the complexion of their balance sheet. So debt will go up and return on equity will completely crash.
No, I agree with you. I think that's a risk, that is there in Torrent. So this whole Elder Pharma business could essentially lead to lower margins and higher interest outgo. Having said that, I think we would, management has indicated that they will be able to substantially improve margins from that business from what it was currently operating. And to that extent, it could be earnings neutral for the next 12 to 18 months. And the other reason is that, the stock is at a deep discount to everything else in the pharma sector. So it still trades at 14 times earnings, and for the last 2 quarters it has kind of delivered numbers which have been substantially higher than our expectations. So we understand that there's a bit of a risk with respect to Elder Pharma business, but we would give the management the benefit of doubt right now and hope that what they are saying with respect to improved margins offsetting interest cost will play out, and apart from that the stock looks reasonably cheap.
Prashastha, good chatting with you. Appreciate you taking the time out and speaking with us today.